Good afternoon, everybody. How y'all doing? What's up? What's up? I should be on YouTube. I should be on the VTF. Hopefully, there's no echoes or any of that fun stuff on the YouTube. We should be all good. All right. What's up, man? What's up, Tate? Hello, Joanna. Bill. Rose Petals. What's up, Jong? Great to see everybody. I hope you guys all had a decent day. What's up, Ricky? Good afternoon. All right, let's jump in. I'm associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. Got out of pins, and my path calls expired in my favor. So that's the only position updates there. Down to, I think, 19 positions overall, all to the long side. I'm not light, to be honest. I am not light to the long side. Still from that Friday low, and we'll see how that turns out. I'm not gonna have a lot for you guys today. So this is a great day for questions. If anybody's got any questions about anything trading related that they want to discuss, big picture stuff, great day for that. The market today was extremely boring. We can take a little bit of an overview of it. I also wasn't here in the morning, did my annual physical today. The that second blood pressure number was a little bit high. By annual physical, I mean basically like first ever physical. I was surprised to see that, but I'm sure biking through Manhattan traffic for 60 streets or so to get to the doctor's office right before they did the blood pressure test didn't help. But yeah, I gotta make sure I get that number down a little bit. Yeah, she commented on um my career uh as not being great, and especially I got to the doctor's office and I filled out the documents and I had a little bit of time, and the market had just opened. It was like 9:45, 9:50, and I had left out a bunch of bids and offers in my positions as per my game plan. I knew some of them got filled, so I asked the lady working the front desk for the Wi-Fi password because I wanted to hop on my laptop and manage those positions and trade a little bit, and she told me no. And then they took my blood pressure. So, you know, maybe that had something to do with it. But it's of course something that's worth monitoring. I'm sure if you guys all need the full health check update from my day. It's probably at least as exciting as the market was. But yeah, Pat did the morning meeting. I didn't really have any ideas. I minimized my own research this morning as far as individual stocks go, just kind of knowing I wasn't going to be able to be there for the open. The open's my favorite time of the day to trade. That's when I think the most amount of opportunity is, and I totally missed the open. So I got back actually in front of a computer at about 11 o'clock. And I would say that the best thing I did for myself today was recognize that I should not trade today. I did nothing new today, zero new things. Literally all I did, was manage my swing positions, some buying and some selling in the positions that I currently have open as per my preset game plan. Because I've been in this business long enough to know that when you don't do your research in the morning, when I miss the open, which is by far my best time of the day to trade, and it's Monday, August 28th at 11 o'clock, the worst thing I could possibly do is sit down on the computer and start banging away at the keys and churning away some money. So I did absolutely nothing. The market today, looking at the SPY chart on the 5 minute, just complete chop. There's nothing to talk about here. The Qs, nothing to talk about. The IWM, I guess the only thing that's notable about the Russell is the relative strength. So the S&P closed up 0.6% or so. The Qs closed up 0.8%, and the IWM closed up 0.9%. So we have a little bit of relative strength from the IWM. If you're bullish on the market, that is what you want to see. Let's switch over to the daily charts. Let's do a little bit of an update on the daily chart just because we don't do an afternoon meeting on Fridays either. Um, so this day is still proving to be an extremely important day. Friday a week ago, meaning not this past Friday, but the Friday before that, Friday, August 18th, that low, that was our conviction buy day based on day four gap down extension, oscillator, short-term tactical, degree of extension from the ADMA on the daily chart. That was the one that wasn't quite perfect, but it was pretty close. Everything lined up Friday for it to be a big buy day for us. And in this circumstance, last Friday, that starts as a counter trend trade. Counter trend trades, as a general rule, you want to have a game plan where you will be less greedy as opposed to when you are with the trend, because counter trend trades tend to fail, but you do want to always keep some stock just in case that retracement becomes a reversal. And if we pay attention to other time frames, other layers of probability, you can see that overall in the big picture, our uptrend is still intact. We still have a rising 200-day. This is just a much larger correction than anything we've seen since we broke out of SPX 4200. But big picture, our overall uptrend here is intact. We are in a big picture pattern of higher highs and higher lows. Ever since the October bear market bottom, that uptrend accelerated on that 4200 breakout. So the accelerated uptrend is broken on a more medium time frame. It's definitely broken on the small time frame, but the big picture time frame uptrend is still intact. So what that would dictate is this game plan from last Friday's buying. While you don't want to be super greedy on it because it still is counter trend on smaller time frames, it is actually with the trend on the really large time frame. So maybe you want to be a little bit greedier than you would be on other counter trend trades because it can still work in your favor. So for my approach personally and my and how I've traded this market recently, I'm still pretty heavy, not as heavy as I was at that low by any means. But I'm still pretty heavy here to the long side, just because when I'm in win-win situations, I game plan myself to be really greedy. And even if it's a lower probability situation of that major greed working out, as long as my risk is appropriate, my risk is all covered, I've booked some profit, that's when I want to be really, really greedy because that's when it pays to be really greedy. So we had this, great initial move. We were concerned first that August 22nd could be a pivot high from this downtrend. That was immediately negated the next day. And then Thursday last week was a really concerning candle. It still is a concerning candle because we haven't negated it, at least not for the spies. Thursday last week is a really concerning candle. That is a negative Maribozu engulfing candle that's within the confines of this short-term downtrend that we're in, that retested a major level that we broke down from and held it as resistance. So this candle from last Thursday is a really important candle going forward. So our most immediate short-term levels on the daily chart to pay attention in SPY is the high of the negative Maribozu from August 24th, which is about 445, that key level that we broke down from. Really the high is 445.22. And the low from Friday, August 18th. Breaking that high or breaking that low could represent a change in character for the market in one way or another. Um, so the concern on Thursday last week was that this engulfing negative Maribozu that resulted post Nvidia earnings when they sold off Nvidia and all those other big tech stocks is actually creating the next lower high in the market that works our way down. Friday was an impressive day. We held in. When you get a negative Maribozu like this, the highest probability situation is a continuation of that direction. But should you reverse and negate that candle, there are higher and lower probabilities in which that can happen. The lowest probability situation to negate that negative Maribozu is just to immediately do it the next day. Get this large, wide-ranging negative candle in the market that brings us down to lows. And then the very next day, you get an even larger, wide-ranging positive Maribozu that brings you right back above 445 and immediately negates it. That's the rarest way in which that happens. What's more likely, if you are going to be able to negate it, is one of two things. Either the next day is an inside day, the market rests, which technically would set you up as a continuation pattern, meaning you get an inside day and then you get an inside and down. Or uh, in a lower probability situation still, you get an inside and up, where you get the inside rest day, but the bulls come in and they give you an inside and up. That would be today's trading session. And then that inside and up, either that day or over the course of the next couple of days, actually leads to a negation of that candle. The market gets back, in this case, above 445.22, and bulls are much more in the clear. The other way in which it can happen, if it's not an inside day, is through a downside tail, exactly like what we had on Friday, where Thursday you close on lows, Friday you tail below but close back above, and then that buying strength that came in on that Friday continues for a few more trading sessions, and eventually, after a few days, as short as two, probably more like 3 to 5, you are able to get the market back above 445.22, or the high of that negative Maribozu. So we haven't done it yet, but so far so good for the bulls that are out there, with Friday's tail through lows and then today's overall, strength continuation, with an okay close. We close around 443 today. We still need to recapture, $2.50 or so, or upside in the spies, in order for the market to start looking, I would say, less bearish on the small time frame. I would not say bullish. I probably would say neutral. Neutral on the small time frame, neutral on the intermediate time frame, and still bullish on the big picture time frame if we actually get a close above 445. If we never get the close above 445, or even as we stand now, I would say that we are bearish on the small time frame, neutral on the intermediate time frame, and bullish on the large time frame. This is a really important exercise. I like to call it the bullish bearish neutral game. And you can look at different time frames and say, hey, on this time frame, are we bullish? Are we bearish? Are we neutral? And if I look at the small, intermediate, and large time frames and they all say we're bullish, well, then outside of large degrees of upside extension, that's the other major thing that we want to pay attention to. I want to be long, not short. And if I look at all three of those time frames, small time frame, intermediate time frame, big time frame, and they're all bearish, I still want to pay attention to my extension rules, just like what happened on Friday's low, where we became extremely extended to the downside, and that can create trades on the other side of the market. But generally, I want to be bearish. And if I've got markets that are telling me different things at different time frames, well, that can be a little bit more tricky. It means I probably want to have a little bit less conviction generally, because how can I have conviction to the long side or the short side if I've got one market that's bearish, one time frame that's bearish, one time frame that's neutral, and one time frame that's bullish? And I also really want to focus broadly on an understanding of relative strength and relative weakness, which we know is something that changes day to day. Sometimes it even changes hour to hour. But we can pay attention to relative strength and relative weakness to get follow through and say, hey, the market's giving me mixed signals, but this sector, this stock are really strong, really weak, and I can focus on that for potential continuation. So that's the market environment we're in right now, and we want to recognize and pay attention to our key, levels here on the short term on the daily chart, to see if we're able to get above or get below them. Because if we do, it marks a potential shift in that bullish, bearish, neutral dynamic of the market, and therefore a shift in how we may want to approach the market. Also keeping in mind, again, the time of the year. This week, next week tend to be a couple of the slowest weeks of the year. So does again, tend to be does not mean have to be. Anything can happen. Um, Markets can always trend, and if anything, if there were a catalyst that were to hit the market right now, you've probably got less liquidity in the market just because of the time of the year, which can actually create for even bigger moves, but that's a lower probability situation. The higher probability situation for right now is that the market is not going to do so much during the day, and that's exactly what we saw. So, for us as traders, sometimes the hardest thing to do is sit on your hands. Believe me, I know it. I did a great job, by the way, a great job not trading, and that's something that I should give myself props for, because something everyone should give themselves props for, is when they don't have a strong advantage and they don't allow themselves to overtrade, because you tend to just hurt yourself doing that. And that's just, where we're at. We've got a market that's giving us different signals potentially on different time frames, especially if we can recapture 445. And it's, really late August here, August 28th. And late August, early September price action already tends to dictate to do less. And again, that's just kind of where we're at. And I didn't do too much today. That's the spies. A super good different picture from the Qs of the IWM. Qs, same deal. August 18th low is really important. And the negative Maribozu high from the 24th is really important. IWM here, a little bit better actually than the spies and the Qs in some ways. This index bounced the worst off of the August 18th low. So that actually gave you the least amount of reward on the upside on that initial bounce if you were focused more on IWM names. And in fact, on Friday, it even ticked below that low. Didn't close above that low. Closing above, closing below is always key, but it ticked below. And then today, it actually ticked above the high of our negative Maribozu breakdown engulfing candle, which is not as notable in the IWM, or noticeable, I should say. Noticeable and notable are probably both correct from August 24th. We actually ticked above that. So on the one hand, the IWM now is actually, with today's relative strength, much closer to breaking up than the spies and the Qs, but it's partially because of bigger picture relative weakness. You can see the IWM is traded all the way down to the 200 day. The IWM never broke out either as big as the Qs or spies did, and we all know why that is, just with the market cap weighted indices and how that works specifically for the spies and the Qs when we've got big tech that leads an initial bounce like it did on the SPX $4,200 breakout in May and June. So we're sitting right on the 200-day here for the IWM, which is kind of flat-ish. Whereas the spies were still far away. 443 we're trading at. 200 days like 414. Qs are pretty far away as well, 367 versus 320, but it's also a rising 200 day. So I think that is kind of the big picture market updates. You know your levels to focus on. I don't have anything for you guys as far as individual stocks. I didn't have any ideas this morning because I didn't do my research. I see Pat had a couple ideas. I'm not going to go over them unless someone specifically wants me to. And I didn't really focus on anything new today. So happy to answer any questions that you guys have. And like I said, this day and this week in general are probably good days for anybody that's out there. I'm looking at you guys, you entry level people that never say anything in the VTF, even though I can't actually look at you because it's digital. I'm looking at you. This is your opportunity to not be bashful and ask any questions you have about anything that's trading related, big picture stuff, market psychology, risk management, game planning. Love it. So we got a question here from Dave. Have you ever used any other types of candles like Heiken Ashi or Renko? My answer to that is no. I've actually never even heard of either of those. Um, my understanding of these other types of candlesticks is that they have a completely different way of forming, and as a result, need to be analyzed very differently. So you're referring to something that's like you're not referring to I'm not familiar with the terms that you just provided, and I could do a little research on my own, and I probably should because I always want to learn. Um, but what you're describing there, those are not like hammers and shooting stars, like types of candles within candlestick analysis. That's an entirely different form of charting. Is that what you're saying? Like Japanese candlestick is a form of charting, and Heiken Ashi is a form of charting? I really don't even know. But no matter what, the answer to your question is no. I've never experimented with any other types of candlesticks outside of the ones that really talk about, Maribozus and dojis and different types of dojis that I pay a lot of attention to. From Ashani, I have a hard time see what you guys see in terms just breaking down the market. Um, it sounds more like a statement than a question. So I guess the question is, what can I do to help you see what we see? The first thing I would recommend to you, if you haven't already, is go through all of my training program classes that I have. It's like, I don't know, 13 classes or something like that. I think the average class is a little bit over an hour. And that is the foundation in a lot of ways of my trading, is those classes. And then we build on that foundation as a team here in the VTF in the meetings during the day, particularly in the afternoon meeting, and right now. This is where we get into a lot more detail and use real examples from day-to-day basis from those classes. I also would recommend while I'm talking about them, I've gotten a lot of feedback from people over the years. Um, I've gotten a lot of feedback from people over the years that watch the training program classes when you first start with T3, whether you're an entry level trader or an experienced trader. For the people out there that are joining the firm who might be new to T3, but you've got a lot of industry experience, you might find a couple of the classes in there to be pretty beginner and maybe a little bit too beginner for you. But there are some other classes in there, like my game planning class as an example, that even really, really experienced traders and fund managers, when they join T3, give me a lot of positive feedback on that they were able to learn a lot. But anyway, directing this more towards the newer people, based on feedback I've gotten, I would recommend that when you first start with us, when you're on your demo, when you first go live, go through all the training program classes, and then watch them again 3 months in, and then watch them again 6 months in. The feedback that I get from people is that they get a lot more out of those training program classes, or not necessarily more, but like they get they learn and understand pieces of information when they rewatch those classes, say after 6 months of trading, that kind of went over their head or that they missed when they first were starting and were first on a demo account or first placed in their live trades. So definitely recommend that people that are newer in the business watch them in the beginning, watch them 3 months in, watch them 6 months in. You're going to pull different things out of those classes each time you watch them. And then any questions that anybody ever has that come specifically from any of those classes, this is where you ask them in the Q&A portion of the afternoon meeting. You ask those clarifying questions here, and we can go over them in detail. So outside of that, Ashani, I don't have a lot for you. So it's great. Keep working on those. A lot of trading, and Scott Ruther talks about this. I know, when he did his conversations with the pro trader thing with Greta like 2 weeks ago, one thing that he mentioned is something that I'm very much aware of myself, is that a lot of successful trading really is just time in the seat. You may not, like I've been doing this for 13, 15 years now. If you're first joining T3 and you've never traded professionally before and you're following along with the morning and afternoon meeting, you are not going to understand everything that I say or everything that Pat says or everything that gets posted in the VTF. You're just not going to understand it. Um, and that's fine. Work really hard, utilize Google information, read things, read as much as you can, and ask clarifying questions. Hey, I don't understand this concept. I don't understand why Patrick posts these options. I don't understand what Bill is talking about with zero DTEs. What is zero DTE? I don't understand what an inside bar is. I don't really understand how you utilize your 8 and 21 EMA on your charts. You'll never improve or understand things that you don't understand if you don't ask or search or try to figure it out. And that's literally the purpose of these afternoon meetings. I don't do this for my own health. As a matter of fact, based on my doctor's appointment today, my own health would probably dictate that I stop doing these afternoon meetings. But for now, I will continue to do them. So this is the forum that we utilize to help everyone be as successful as they possibly can be, and I'm happy to sacrifice my time each day to help you guys become the best traders that you can be. So if Ashani, if your question is just I'm having a hard time, seeing what you guys see in terms of breaking down the market. It's a very, very broad question, so it's difficult for me to, give you too much feedback on that outside of, hey, review the classes, hey, follow along with the meetings. But, dive deeper into, what are the specifics that we discuss that you're struggling to understand? Is it something about moving averages, something about how I view extension, something about how we utilize indicators, how we, study the candlesticks? If you can break down where your difficulties are coming in into specific questions, And then, I love to use Rex as an example. Rex started as a newer trader, and I can already see that there's a question in here from Rex because Rex asks probably at least one question in basically every single afternoon meeting that we do. And I don't want to overly speak for you, Rex. Maybe you could comment, but I would like to think that the fact that you ask a question literally every single day means that you have gotten yourself through your learning curve in your trading significantly faster than you would have otherwise. So yeah, and again, it's I'm happy to answer all the questions in the world today, but it should be a habit for people in the same way it's a habit for Rex. Don't be afraid to ask a question every day or every other day or whatever that will help you become a better trader. It's literally what I'm here for. Um, cool. So hope that helps, Ashani. Uh, Cool. Thanks, David Bandit. I'll try to remember to take a look at those. From Eddie Vic. I think the major catalysts are ADP, GDP Wednesday. Yeah, we got some important numbers coming out this week. PCE Thursday, unemployment and non-farm on Friday, with the economic data coming in. I don't think we are going to overtake 460 at the end of July on the SPY, or I mean that high from the end of July on the SPY. But anything could happen. Yeah, for sure. I agree. I don't think so either. My biggest thesis, and I've said this since the bottom, is that we bounce enough and then range. There's data that you could point out to that could be bullish. I could get us back to 460. Probably not by the end of August. The end of August is now. There's also data that you could point out to that could lead to harder, faster selling down to SPY 420, or even a little bit beyond that. But I am actually just kind of expecting that this market finds a range. That's what I think the highest probability situation is right now. From Eli, although we gapped above yesterday's high and held the range, just for reiteration, can we really say bulls have confirmed themselves until we break and close above the August 24th highs? No, we need to close above the August 24 highs, I think, for bulls to begin to prove themselves and for our time frame analysis to adjust. And I think even above 445, we're still pretty neutral on the intermediate and small time frames. It's just that the small time frame right now has been bearish for this month, and that would end that. So we basically would go from right now. Right now we are bearish, neutral, bullish. We would go from neutral to neutral, neutral, bullish. So that is an improvement for bulls, but it doesn't mean that you know, that they don't have work to do. From Rex. Hello, Derrick. Last Friday I was looking for VFS. Oh man, this VFS. $93 today. I didn't keep any over the weekend. I traded it on Thursday and Friday with success. And I didn't keep any overnight on either day. I know this is a riskier name with a low float, but after the open with decent volume to 60, you're talking about Friday, right? With decent volume to 60. I saw consolidated, held above $55, which is Thursday's high, and then it gave an inside 5 at 955. Yeah, that 60 seller was sitting there jamming it back down. Um, I saw consolidated, held above 55, which is Thursday's high, inside 5 at 955. So I took it with a very small size. It turns out that it failed. I understand this is not an A+ trade, but I see it as a B or B- trade. I felt like every time I took this kind of trade, it would just stop me out and come back on later. Would you say taking these types of trades while it's close to 10 a.m., I better leave some room in order to add when the 15-minute and 80 MA catches up? Not necessarily. Or should I take it off for a smaller loss after 10 minutes, seeing the stock still? I think that's you need to find a happy ground, actually, is what I really think. So the second part of the question is, or should I take a smaller loss after 10 minutes, seeing the stock is still stuck in the same area, since this is a low float name and this type of trade really relies on momentum? Yeah, so I think that you need to give it enough room that you don't get shaken out off of volatility, but not so much room that you're putting on a massive amount of risk on it is really what I think. Um, So I think if you were trading that inside five, that you would just utilize the inside five low if you're using that as your entry execution. And that's it. The two trades that I took on it, I think on Thursday I risked like $1.50 in the name based on my price, and on Friday I bought it pre-market. I think my price was like 52, and I traded it versus 50, and I had like $2 worth of risk, and there it was just based off the small time frame, the pre-market 5 minute charts when I got in it at each day, that I took it. I wasn't giving it bigger room on a daily chart or anything like that, because these names generally, like you're saying, are either going to go or they're not. And unfortunately, the really tricky thing for me was I ended up raising my stop to the day low, which happened at the open at 55.20 once the 80 caught up. And then we ticked this new low to 55.03. And I got stopped out of more than half of what I still had at that point at this low, and I just had a very small position that I was still giving my pre-market stop of $50 to make sure that it was in a win-win. So when this thing basically shook me out of a bunch of stock for profit, like I'm, getting stopped out at $55.20, but my price was 52, so fine. But I didn't have enough real stock then at this point. I liquidated my position. I got a pretty good sale on that position. I got out at like 72.40, which is pretty much the high of the day that day. But I didn't keep anything, just by a little bit. If I could have gotten a little bit of a better close on Thursday, I would have kept some overnight, and I would have had a bigger position throughout the day on Friday. And I didn't keep anything on Friday either, because I had liquidated it because I'd gotten shaken out of a lot of my new stock there. So I had nothing new for the bigger move to $93 today. I had no new position. And up here, I'm not getting back in. This thing, I've spoken about it for people that haven't heard me talk about it previously. There's just a tremendous amount of risk in this. The stock is probably worth $1. So, Derek, why would you go long? Why aren't you shorting? Because the stock is going up. That's why. The stock is worth $1, but I'm going long because the stock has been going up. But I just don't believe in it at all. It's just understanding that super low float, high momentum name. And we've seen, like with that HKD, that sometimes you can run a stock like this to $800, even though it's only probably worth $1, and it'll eventually get down to that dollar. So you really need to make sure you have the risk management in place. I do not like the idea of being involved in like a VFS and giving it a lot of downside room. You're asking to get really hurt. Um, I also really do not like the idea of shorting the stock, even though I think it's worth $1. Because if I short it at $85, and it'll go to $1 eventually, and I'm going to be right, but it could go to 600 first, and I'm not going to have a career. So I like, if I can, taking those small time for momentum trades and getting my risk covered. And then once my risk is covered, just like not watching it and seeing what it can do, which is more or less what I did, especially on Thursday. Thursday, I had a really, really solid core position, and I was trailing it really loosely, and I just wanted to give it all the room in the world. Once my risk was covered, I was willing to give back, thousands of dollars to see if I could get a move to $100. If I could get a move to $100, it would have been, tens of thousands of dollars, and that risk reward is worth it. So it just didn't work out. I didn't keep the position, but I hope that helps with your question there, Rex. Um, Good stuff, Judy. Awesome to be able to fly and make money. I love it. Uh, you sent me an email over the weekend? I think I would have seen it by now. Can you re-forward it to me, Tate? Just re-forward it to me. Because now I feel like I saw something from you, and I might have clicked on it and then clicked away. In which case, just re-forward it to me if you don't mind. Um, uh, After watching the Gap video, I saw Tesla move above the channel it was trading in on the daily. Yeah, so Tesla has resistance at like 240-ish. So 240 is a really big level actually for Tesla. Now that I remember, we were talking about this late last week. Um, so yeah, it's just straight line resistance. I figured after watching the gap video, I figured it would be a gap and go, or at least come back and retest support the gap before moving towards the upside. If it gapped above 240, that's exactly the right thought process, and it did. Just then gapped above 240. So what I would look for is a breakaway gap to the upside, provided that the market is supportive, right? Because we always want to pay attention to our layers of probability, provided that the market is supportive. The fact that the stock gapped above 240, yes, Tate, at t3trading.com. Provided that the market is supportive, the stock gapped above 420. I would also look for a gap and go. It's a textbook breakaway gap. It failed. Today it failed. It gapped up above and it came back down and lost the level. So if you tried buying Tesla somewhere above 240 today versus 240, I like the trade. It just didn't work. And that happens sometimes because we work in a game of probabilities. So there are no 100%s. Uh, can I break down what you should be looking at pre-market? You're not 100% on Lightspeed. I don't know what that part means. I'm not sure if that means you don't fully grasp the software yet, in which case you should reach out to the trade support team. Pat, in particular, is usually the go-to person when it comes to trading software. So you can email Pat, you can email the trade support team, and they can help you Lightspeed specifically. I can speak probably not about Lightspeed because I'm not great with the software myself, and I could talk a little bit about morning research process. I basically utilize the VTF for all my morning research, and it sounds similar to what you did with Tesla. I review charts pre-market, I review everything that had news that was in play, and I look at daily levels primarily to try to find trading setups on the daily chart that I can then execute in the small time frame. Next here from Lath. Do you use the 8 and 21 EMA in smaller time frames? Yes, I do. On an extended trading chart or on a regular market hours chart, and why? So I use the 8 and 21 on every time frame that I look at, and I look at pre-market charts pre-market. Once the market opens, I generally switch all my charts over to exactly this. Um, to intraday only, to showing yesterday through today for 5-minute charts, and some further back, usually like five trading sessions on a 15-minute chart is usually how I look at them. I don't like, every once in a while I'll see a trader who is looking at a 5-minute chart and it's just like that day only, and it's the beginning of the day. You've got no context. You're just seeing these bars form in real time as they form. You've got no context. I need a little context. I need to see where this was coming from yesterday, and I need to be looking at that in conjunction with the daily chart. The reason why I turn off the pre and post market charting as soon as the market starts, or usually I do it like a minute before the market starts, is because the volume that stocks trade pre and post market is so low compared to when the market actually is open that it distorts the charts from the important information, which is when the volume is actually trading. I mean, you can look at Tesla, and Tesla actually is a stock that trades pre-market. Some don't trade at all. But Tesla goes from trading, I don't know, 20, 30,000 shares pre-market on a given bar to all of a sudden trading, on 5-minute bars, a couple million shares every 5 minutes. You can't even compare it. So this chart, I think, distorts the information. As soon as the market opens, I switch to this chart, and I've got my screen share up most days. I didn't have it up today, but you can usually see what I'm looking at is just like that. It's SPYs, Qs, IWM, yesterday's price action into today's price action as it's forming, and then my whatever stock is linked to my market maker, which I'm typing on my market maker in the other screen right now, and that is going to constantly be changing. And then this, I change the time frame on this a little bit throughout the day. Sometimes it's a daily chart, sometimes it's a 5-minute. I've got other screens here with other charts as well. So, a lot of times this will be a daily chart, and that means I'm looking at a 5-minute and a 15-minute on another screen. But yeah, always that 8 and 21 EMA on every time frame that I look at. Nice, Judy. Sounds good. Enjoy the trip. Scrolling through here. I find that sometimes my fibs work better when I include the pre-market data, which is why I ask, but I get your thought process. Sure. Yeah, I don't look at fibs. It's not to say that I don't think retracements are important. I just don't look at Fibonacci retracement numbers. I don't believe in magic. I don't believe in magic numbers. But I think that just understanding the depth of trend to pullbacks is important. Did this thing pull back 25%, 50%, 75%, 100%? That matters for probability of continuation. Cool. So we got through everything thus far in the VTF. Let's pop over to the YouTube. What's up, Terfra? What's up, James? James John. What's up, Shubham? From James John. What's an effective stop management practice in terms of limiting risk and locking in profits? Sure. So it's a pretty broad question. So you want to utilize stops generally for two things. One is initial risk management on the trade, and then two is for um, really profit management when trades are actually working out. So trimming and trailing, right? That's the trailing portion of it. So first of all, risk management, right? Every trade type that I basically teach traders, and some examples of trade types are the breakout, the breakdown, support, resistance, inside bars, candlestick trades, hammer capitulation candlestick, or hammer continuation candlestick, or shooting stars being the opposite of that, among a lot of others. Every type of trade has its appropriate stop built into it, because the definition of a trade is something that has a technical reason. Why do you want to get in it? And a technical out. Out is another term for stop loss. The definition of a trade is something with a technical reason, a technical out. It is not a trade if it only has one or the other. If you're looking at something and you're like, hey, my reason for getting in the trade is because the stock is going up, just to make something very simple, that's not a trade, because there's no stop loss associated with the stock that's going up. So that's where you differentiate trades from pieces of probability. The fact that the stock is going up, for lack of a better term, we have an uptrending stock, means that your long trades will have a higher probability of success. But a long trade could be a breakout. It could be a hammer continuation trade. Um, and those trades have an associated reason and an associated out or stop loss with each one. And the stop loss, which manages my risk, is dictated to me by that trade. So the hammer candlestick, it's the low of the tail, right? Why is it the low of the tail? Because the tail represents the spot where buyers took control from sellers. Or with a continuation hammer, it represents the spot where buyers regained control from sellers. And that makes it significant to the chart itself, significant in understanding supply and demand. So that's that. Next, you can utilize stop losses for trade management, for profit management. And, the trade that you just bought is now continuing in your favor. So you want to raise your stop loss over time. I'm a really big believer that the stock market tells you what to do. You don't tell the stock market what to do. And that goes back to what I was saying about, the initial trade setups that you find. I'm not telling the market where I want to put my stop loss. The market's telling me where to put the stop loss. The stock market is telling me that hammer continuation candle is an important spot based on supply and demand, and therefore I can use it as a stop loss. It's the same thing with trailing stops. I do not like, and I know a lot of people, especially in the retail world, do this. I do not like, one, putting stop losses in at your price. Your price is not important in the market, your price is important to you. I do not like raising your stops based on certain amounts, certain dollar amounts. I'm going to have a 30-cent trailing stop or a 1% trailing stop. I don't like that. Every once in a while, I'll speak to someone who joins T3 and they're previously trading at like TD, and like, I guess TD has a function that you can just trail based on amount of cents or percentages or whatever. I don't like that. That's important to you. It's not important to the market. Um, so let the market dictate to me how I can trail. And there's three main rules I use for trailing. I'm not going to give a whole class on that right now because I have an hour plus long class on it. But basically, my rules are pivot, ADMA catch up, and new high. But a pivot point, right? If you're in a stock that's trending higher and you're long, a pivot point represents a spot where buyers regain control from sellers. It's technically important. So that could be a spot that I raise my stop to. So thanks for the question, James. I hope that helps. From Shubham. Um, I want to work with you as a thumbnail designer. Well, if you want to do it on a volunteer basis, that'd be great. Feel free to shoot me an email, theoldensmith at t3trading.com. From David, why don't you use hollow candles? They give more info. This goes back to Dave S's question. I don't really know what they are. I can look into them. Um, I'll look into them and I'll look into those along with the ones that Dave mentioned earlier. Always down to learn new things. With that said, I don't want to say I'm stuck in my ways because I'm really not stuck in my ways. I've adjusted my trading approach so many times over the years. But right now I've really got something that works for me, and I don't want to fix what ain't broken. But at the same time, I always want to learn because eventually what works might break, and then I need to have other information for my edge. So hollow candles, I'll write that down right now. Hollow candles versus solid candles. First thing that comes up. We'll look at that later. Uh, Thank you for the input there, David. Back from James. A trade is a technical reason, a technical out. It's not a trade without both. I like that. No problem. No problem, James. Happy to help. Um, Back over into the VTF. I see Bandit saying the price of Heikinashi may not be the price of the shares because of the calculation. It's a better reference. Okay. Still don't know what it is. But it looks like I got through everyone's questions on YouTube and the virtual trading floor. Really slow day today. 5 o'clock. Oh, Eddie Vick sneaking in a question. Hey Dio, just want to ask your general thoughts on Chinese tickers lately. Do you suggest us play into them or guess should we just avoid them due to the recent volatility? I saw PDD has earnings tomorrow. Um, yeah, so my answers are always going to be the same for you. Whenever you're asking me about stuff into the reports, and I know you trade options, so if you ever are going to gamble with something into an earnings report, options are the way to do it. Because you know exactly how much you're going to lose when your gamble goes against you. I do think though that trading into earnings reports is 100% gambling. And maybe that's okay, honestly. If you really understand your risk reward on it and you put some math behind it, maybe that can work out for you. I really don't know. Um, and it's like I always say, even if I knew what the numbers were going to be, I still wouldn't even know how the stock was going to react to it. So you really don't ever know. PDD tomorrow, you probably know I'm super biased against that company. I've got no position in it currently. It's my best short on the year from a P&L perspective. I just think that the company engages in fraud, and I'm surprised that it hasn't led to worse repercussions on the company thus far. And they've gotten through a lot of stuff recently. They've blown up with that. I mean, actually, I think it was kind of swept under the rug. A lot of that information about how that app is legally stealing all your information if you have it on your phone. And then, everything that they're doing in the U.S. is all counterfeit goods, which just, yeah, I just would never want to be long this company in case regulators eventually actually ever decide to do something about it. But tomorrow on an earnings report, it could go up, it could go down. I got no idea. um, yeah, yeah. Timu is full of counterfeit goods, and then they were doing some really, from my understanding, some really illegal stuff on how their app was harvesting data. And I'm surprised that the EU hasn't come down big on them. That the information was starting to come out and then just kind of disappeared a little bit. But I've actually read a whistleblower report on PDD from like their former head of cybersecurity on how that app actually works and how it steals everybody's information. It was not good. It was not good. Um, cool. All right, I am gonna end it. Have a great night, everybody. See you all tomorrow. And you know what to do if you're on the YouTube, which I haven't ended yet. Press the like button. See you next time.